Oracle shares are popping in the after hours, up nearly 10% is what I'm seeing after the company reported their Q4 numbers. What's interesting is the company's Q4 earnings missed both on the EPS side, but also the revenue side. So we have to shift our focus to management commentary, and incredibly bullish commentary out of management over at Oracle. We'll compare their commentary based on the expectations, where those were, not only where the expectations were, but the highly elevated expectations, at least from a revenue standpoint. We'll take a look at some more commentary. Then we'll talk about the big deals that are coming down the pipe for Oracle. OpenAI and Google are knocking on the door of Oracle, and it looks like it's bringing some big business. We'll look at the financials as well. Oracle doing like what everybody is doing in Silicon Valley, although I believe at this point Oracle has moved to, I think, the great state of Texas, at least their headquarters. They're driving up revenues and they're barely moving their operating expenses. In fact, we saw some decline there for Oracle, so that's obviously going to help profitability. We'll take a look at the balance sheet, cash flows, and then you're going to want to look at this technically. We were on a breakneck trend since the 80s. We flattened out a little bit. We'll talk about some areas where, as this one maybe kind of comes back in over the course of the rest of the year, where there are some opportunities with Oracle. What is going on, investors? Hopefully you guys are doing well out there. If you own Oracle stock over the last year, you're not hating your life, but you've seen other stocks in this AI mania absolutely skyrocket, up only 6.4% year to date, up about 17.5%. Start stretching out in a longer time frame. Stock has consistently performed, but could this be a turning point for Oracle? And some of you might say, well, I missed the big move. It's up 9.5%, probably 10% tomorrow. Look, you still got a forward earnings of just 22 on this one, and all of that is going to need to catch up, because we saw and heard from Oracle management after the company released their Q4 earnings. And this is what the CEO said. They said throughout the fiscal year 2025. Now, we just wrapped up fiscal year 2024. These were Q4 earnings, so we just wrapped that up. Fiscal year is over. They're in the midst and they're starting fiscal 2025, even though most of us are celebrating 2024 calendar year as we speak. But the CEO says they expect continued strong AI demand to push Oracle sales and RPO. RPO stands for remaining performance obligation. It's basically, you can maybe even think of it like a backlog of sales, committed sales, if you will. So they're saying Oracle sales and their revenue performance obligation is going to go even higher and result in double-digit revenue growth for this fiscal year. This was also probably the most important segment. I also expect that each successive quarter should grow faster than the previous quarter, as they have their capacity in their cloud services start to catch up with demand. So they are not only seeing over and above accelerating demand, but they are anticipating accelerating demand all through next year. And I will bring you to the revenue estimates that were for 8.5% growth. So the COO just said, hey, we're going to do double-digit growth for the entire fiscal year 2025. That'll end this time next year. Well, Wall Street was only expecting 8.5%. And here's the crazy thing, is that is on heightened expectations. We've really seen over the past several months, really since December, analysts continue to raise their revenue expectations for Oracle. Well, guess what they're going to have to do tomorrow and into next week? They're going to have to raise this $57 billion estimate once again. The high-end estimate for 58.5 is likely incredibly too low. Also, the low-end estimate, that's what makes some of these forward revenue, EPS, in this case, price to earnings, might make them on the little bit conservative side, at least for a company like Oracle. Now, we also got further commentary, and then they said in Q3 and Q4, Oracle signed the largest sales contracts in the company's history. This is a company that's been around since the 1980s. Some of you weren't even out of your mom's womb in the 1980s. And obviously, a lot of that has to do with the fact that they signed deals with OpenAI and Google. I'm sure most of you saw, or at least saw news from Apple's AI event where they're partnering with OpenAI. So what is OpenAI having to do over the next 3 to 4 months as they anticipate the new, I think it's iOS maybe 18 rollout where it's going to be integrated into, I believe, 1 billion devices worldwide. Well, OpenAI actually has to start planning for that demand surge now, and they literally have no idea how many people are going to whip out their iPhone and use OpenAI inside the different services. So this company is having to, maybe scramble is not the right word, but they rely almost exclusively on Microsoft, and now they're going to have to start expanding that. So is Microsoft. Also, Google probably anticipating not only their phones will continue to see upgrades as they have many of these features, but other handset makers as well will continue to roll out features on the Android platform to keep up and keep putting pressure on Apple from the Android side. And so that is why we're seeing accelerating demand, not only for the full fiscal year, but they're saying in each successive quarter, it's going to grow faster than the previous quarter. So this AI, some people call an AI a bubble, or when is it going to end? Well, Oracle just told you it's probably not ending, at least on kind of the database cloud server side. It's probably not going to end for at least another 12 months. That's obviously going to be good for semiconductor stocks, but we'll talk about Broadcom probably tomorrow when the company reports earnings. Now, revenue came in at that $14.3 billion. We can't ignore that the fact that $14.3 billion was just 3.3% growth year over year, and it did miss expectations by about $280 million. But again, that bullish commentary is what everybody is going to point to. Now, the company did a nice job. They drove higher sales, at least from a mix or percentage basis, to their cloud and licensing support. This is obviously the highest margin business, the largest business, if you will. And the rest of these more or less support this high margin business. Now, what we're seeing across a lot of tech companies is they're driving down, or they're at least trying to flatten out their operating expenses. Long gone are the days where a lot of these tech companies are basically making no money or just outspending each other on marketing and sales and different stock-based compensation. We saw over the last year over at Oracle, at least on a quarterly basis, $9.7 billion down to just $9.6 billion in cost, basically flat year over year. So you take your revenues, $14.3 billion, you minus off your operating expenses at $9.7, you get operating income at $4.7 billion. Now, that did miss expectations, at least from a Wall Street perspective, but it was up, at least on a constant currency basis, of about 15% year over year, pulled down to a net income number. And you do see some slide and some slippage here from 3.3 down to 3.1. As the company does have a sizable debt balance, when we get over the balance sheet, you will see that. And they had to actually pay some income taxes this last year, however that works. Now, one thing Oracle is not it's not Google or maybe even Microsoft in terms of a cash balance sheet. Now, they do have $10.5 billion, so we're definitely not going to just throw that out. They also had, as we talked about, they have this performance obligation. It's basically commitments from companies now like OpenAI and Google to buy their services to the tune of $98 billion. So that's a significant amount of money. They don't have a ton of cash assets, at least compared to other tech companies out there. And this is a slightly different tech company than we normally look at. But here's your liabilities. Big $76 billion of long-term debt, 86 last year. A lot of that going to get rolled over to the current side. We'll see here over in cash flows where we get a year-ended view, how they kind of whittled that down maybe a little bit, but not as much as last year. You pull down a net income for the full year, $10.5 billion. You're going to be expecting that to increase or get better as we move into next year, as you got about a $350 billion market cap on this one, probably trending higher as we head into tomorrow. Your net cash provided by your operating activities, again, this is on a year-end basis. We look at some companies where they're putting up over $18 billion of quarterly operating cash flow. This is on a year-end basis. You went from 17.1 up to about 18.7. Company doesn't have to blow a ton of its operating cash flow on things. They do have capital expenditures at about $6.9 billion. Last year it was closer to 8.7. So they're able to grow their revenue, but kind of whittle that down, if you will. So that's pretty solid. They didn't make a big acquisition like they did last year. And so you didn't chew up a ton of this operating cash flow in terms of capital expenditures and acquisitions. So you were able to repurchase some common stock. You were able to pay some dividends to the shareholders, as well as you have a growing dividend over at Oracle, over nearly $4.4 billion of dividend payments Last year was closer to 3.7, and they did whittle down a little bit of senior notes, or otherwise known as debt, from $21 billion last year. So they really whittled that down, just $3.5 billion. But with this solid amount of cash flows, even if you assume slightly elevated capital expenditures, they'll have plenty to pay the dividend, repurchase a couple of shares if they want to, and continue to service that debt. Obviously, in a lower interest rate environment, a company like this probably would do some rollovers or some refinancing on that debt. Also, we have to factor in the fact that Wall Street was expecting $57.7 or $57.8 billion of revenue, and the CEO just told you it's probably going to be a lot higher than that. So expect in the next couple of weeks these revenue estimates, and certainly probably profit estimates as well, probably going to continue to inch up higher really across the board over at Oracle, as the news they got after hours was incredibly bullish. So what's that going to do to your stock? Well, it's going to push it to the top of a long-term trading range. We're talking about a channel that goes back, at least in its current form, all the way back to like 2002. So even during the great financial crisis, you didn't really deviate out of this pattern. You also had COVID as well, where you didn't really deviate too far from the channel. Also, those October lows in 2022, I tell you what, this is why you have to keep your head on straight as an investor. When you get these moments, when the market has big hiccups, like great financial crisis, like during COVID, also like during the depths of the October lows, got to force yourself to step in there and buy. When the doom and gloom is its loudest, those are often the best times. Now, what's the time you do with Oracle right now? As in the after hours, you're trading up closer to $135 per share. That's going to put you well up here towards the top of a channel. These are areas where, at the very least, maybe you take a little bit of a step back. If you own some shares of Oracle, could be a time where you reallocate some of that positioning. You could continue to hold as well. No one's going to blame you, particularly based on commentary, but any pullbacks in Oracle, particularly when you get south of the middle of these channels. So in the shorter term, you're probably looking at, we'll call it south of 120 is probably your first action and your first time to move. And you really should plan that out ahead of time, because when these stocks make these moves, and it's usually not a matter of if, it's a matter of when they make these moves back down to a more normalized level, well, that's when the news flow is at its worst, and it's actually hard to pull the trigger. So make that commitment now. Pick your price targets out with Oracle, and it could potentially pay off down the road. Folks, that was Oracle. Q4 earnings will be back later this week, probably tomorrow. I think Broadcom reports tomorrow, and then obviously we'll be back on Friday as well. Hopefully you guys have a wonderful day out there. Back again soon. Good luck with your investments.